Today is Monday, April 14th at 11 a.m. You are looking at a position that we put on a week ago. And in a moment, I'm going to show you how and why we put that position on. This is it. It is a options contract, a call option contract on the SPX.X. It was a single contract. We actually had a second one. We closed it the next day, but this is one for May 23rd, a strike price of $49.70. When we put it on, it was 45 days to expiration. Today, there's just 39. The delta is currently at 81.51. The trade cost, the cost to put this trade on, was large, $27,790. But we had a very, very high conviction degree of confidence that this trade would pay out and pay out handsomely. We're going to close this contract for how much? $26,615. And we're going to do that right now. Close. And the position is closed. Let me show you how and why and how we came to place this trade and share with you how you might take advantage of the very same tools. This is SMC Swing Machine Plus. Swing Machine Plus. If you are a monthly member to Stock Market Caddy, you get to see this view every night through a video. If you are an annual member, you have this tool on your desktop. And we in service, much like what we're doing right now, the trade setup. 1 week ago, just 1 week, the S&P was where? Was in panic. The market was panicking. We were below 5,000. The VIX was where? The VIX was in euphoria. They weren't euphoric. They were very, very fearful. That's what that means. They were buying the VIX because they were buying fire insurance after the fire had broken out. So the position was euphoria for buying protection. The skew had been in euphoria, but the skew was coming down. That divergence gave Susan and I the confidence to do what? When everyone else was selling, we were buying. We came in when the S&P was in panic and trading below 5,000. We bought 2 call options, and yes, they were expensive because the implied volatility was very high. But because we've done this a number of times over the years, just the number, we had the confidence to go in and to buy those call options. And we got plenty of time. Now the market popped the very next day, and that first call option paid out $12,000. Now we had to put $27,000 at risk. Now there wasn't much chance that we're going to lose it all, but there was a chance that we could lose some. Fortunately for us, the market popped. We pocketed the 12, and as you just saw, we carried the remaining call up until a few minutes ago, and that paid out some $26,000. I am Baggett at StockMarketCaddy.com. Today, once again, is Monday, April 14th at 11:24. There's a lot of confusion in the market. There's a lot of noise. We have inflation, we have deflation, tariff this, tariff that, interest rate this, interest rate that. We don't listen to any of it. We listen and watch our algos. Why? Our algos track the money flow. People don't lie when it comes to their own money. All we have to do is understand what the tools are showing us, understand what is available to us in these markets. We trade futures intraday, as many of you know, but we also trade options and we will invest. Be sure to visit stockmarketcaddy.com. You are welcome to call me any day from 9 a.m. to 9 p.m. And remember, the most valuable commodity of all cannot be bought, cannot be sold, cannot be traded. It's time. Time itself. We can't get it back, but we can waste it. And I'm not prone to wanting to waste my time, and I hope you don't either. We're ready when you are. Thanks.